traders. Okay, so we finished last week trading US session with some important economic data, and that's obviously the US employment data, non-farm payrolls. But if we just go back to the beginning of the week, we had the Atlanta Fed GDP nowcast, which showed that GDP was falling like a rock, and then it was basically down -2% at the moment. So since we've seen the potential that GDP is now negative, the US market is certainly looking very closely at any US economic data and worried about weakness in that data to confirm that maybe the US economy is rolling over. So going back to non-farm payrolls on Friday, that data was expected to come out, the headline around about 160,000 plus jobs added, and the data came in around about 150,000. So slightly less than expectations, but as the market was worried that potentially this payrolls data would be a lot weaker, and obviously we've got a market at the moment that is nervous. It doesn't take much for the markets to start selling. So on Friday, the fact that the payrolls data was okay, it hadn't fallen out of bed. The selling that we'd seen all week in US equities abated, and they ended up being up positive around 0.5% for our S&P and 0.7% for NASDAQ. But look, those markets at the moment are in sell rally mode, so I would suggest being a little bit careful, buying the dips on US equities at the moment. Okay, so on Friday we also did have the first crypto summit at the White House. There was big expectations from the crypto community that they'd find out something new or get some very positive headlines from that. What they did find out is that the US government will not be buying crypto for strategic reserves anytime soon. That certainly will need Congress to pass that as in law. So for the government to be able to do that, and again, that is not happening anytime soon. So the crypto community did not get the positive headlines that they were looking for. And over the weekend, we have seen Bitcoin and ETH, sort of blue chip cryptos. ETH down to 2,000, and now Bitcoin down towards the low 80,000s. Suggests that if it's a big support level for Bitcoin around 80,000. If we did break that, we certainly could see that again sharply lower. A lot of liquidations and a bit of a bloodbath. So to start the week, at the moment, it seems like the focus is on crypto. So be careful in the crypto space. Okay, over the weekend we did see here some other news, and that was to do with tariffs, and this time it was China placing tariffs on Canada for a whole list of agricultural products that are imported into China. And those tariffs that they will receive are at 100%. So the trade wars are certainly in full swing, and this week we do have the tariffs for both steel and aluminium that the US is imposing on all those steel and aluminium imports into the US of 25%. They're happening on Wednesday, and obviously we've still got at beginning of April, we've got the reciprocal tariffs from the US. So these tariff headlines and tariffs certainly aren't going away. It's been a big negative for the market, something that's been weighing on it. And again, prepare that this is going to continue, to weigh on the market. Sticking with Canada this week, there is a Bank of Canada meeting. The BOC is expected to cut rates from 3% by 25 basis points to 2.75%. That's about 70% priced in. So if you are trading the Canadian dollar, obviously you're going to get a bit of action on what's going on with the tariff headlines and also what's happening with the Bank of Canada. The other big news that's happening this week is that we do get some US CPI numbers out for February. The market is expecting that the headline there to go from 3% to 2.9, and also for core inflation year on year to go from 3.3 to 3.2. So all that will be happening if that does get realised is that the CPI data would just take back the gains that we saw in January. So pretty much, CPI then had done nothing really for the first 2 months of the year. But it is worth noting that these CPI numbers will not be taking into effect any of the tariffs that have basically just started rolling out. We'll start getting, I suppose, the maybe higher inflation and prices from those tariffs now from April onwards. So that's probably the when markets really going to focus on these inflation numbers. But in any case, look, these markets at the moment, probably the key takeaway is that we still have very nervous markets, and they are willing to sell. It doesn't take much for them to do that, so we are still trading risk off with a bearish bias. Good luck with your trades to start the week, and we'll check back in with you soon.